Good morning, ladies and gentlemen. We are here first time over on Stocktwits and Stocktwits Nation. I hope you guys are fired up. Tradecaster Nation, everyone who follows me on social medias. Guys, I am so jacked up to be here bright and early in the morning. Now, if you guys do not know who I am, my name is Sean Dekmar. I'm going to be bringing the energy, bringing the enthusiasm every day because honestly, we work the best job in the world. How can we not be fired up? How can we not be excited, especially in this market? This market is one of the best times to trade, and so many people don't realize that. So many people don't notice that. So many people are saying to themselves, oh man, the market's falling, the market's dropping. We're taking a look over on the S&P 500, and on average, we have been seeing around a 2.3% move on the S&P 500 per day. Do you guys not realize how ridiculous that is? Sure, the markets have been falling. Sure, the markets have been dropping. Sure, we have been seeing weakness. But that does not mean there's not opportunity to profit. It is so volatile out there. As a trader, I will tell you right now, I like to day trade. I like to get involved in plays. I like to get in and out. When we see the markets fading and falling, when we see the markets dropping this big, this is going to be volatile city. We are going to be able to have opportunities every single day to be able to make maximum profit. Now, sure, we want to make sure we're doing it correctly. Can we predict the markets? Can we put the odds in our favor? Can we essentially be the house? That's what we're looking for every single day. Can we be the house? We don't want to be the random gambler. We don't want to be the random tourist. We want to make sure that we put ourselves in the best positions with, again, a game plan with odds. So what I want to do here for the next hour straight is I want to talk about the S&P 500. I want to talk about global events. I want to talk about hot day trades of today. I want to make sure by the time you end off this stream, you have a clear-cut, concise plan of where you guys want to be going next for the rest of this day, for this Money Monday, for this rest of this week. And I hope you guys are so jacked up and so excited. So if you guys are excited, no matter where you guys are watching, make sure you guys smash that thumbs up right now if you guys are over on YouTube. Make sure you guys hit that favorite and retweet right now if you guys are over on Twitter. And make sure you guys drop some comments right now in the chat room if you guys are good, ready to go. I always hit my squad with the good old Dekmar trades. Ah-hoo! Now, I know some people right now also might be joining for the first time and saying, what the heck is going on here? This kid is again coming out firing. It is again 7:33 in the morning. Guys, I'll tell you right now, when again, you're watching the Sean Dekmar show, you lock the door, you close the blinds, you get dialed in, you tell the wife or husband, I'll see you in the next 45 minutes, leave me alone. I'm locked in. I'm dialed in right now. So let's make sure every single person has an understanding of what's going on with this market. But as always, guys, happy Money Monday. Let's break it all down and let's make sure that we're all set, ready to rock and roll. So the big thing, of course, we want to be focusing on this morning. The big thing is going to be all about tariffs. We want to talk about inflation. We want to talk about interest rates, Jerome Powell, Trump, what is truly happening. So I like to always start back with the basics. Why are we seeing the S&P 500 fall? Now, obviously, we hear the word tariff, 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 and it seems like in 2025, you say the word tariff, people run in the opposite direction. You say the word tariff, and all of a sudden people start sprinting and say, don't say that, shut your mouth. But in all reality, are tariffs bad? Guys, it's not that tariffs are bad. Now, I'm not here again talking about politics. I do not care. If you love Trump, if you hate Trump, if you're left, if you're right, if you like Kamala, if you don't like Biden, who cares? I don't care. What I want you guys to understand, it's not that tariffs are bad. It's the uncertainty of tariffs. When it comes to money, people don't want to be fearful in any sort of way. When people do not know what's going to happen, that is when we are going to see some of the biggest falls, the biggest fades, some of the biggest drops. Even if you have an amazing game plan. If you have an amazing plan, but it hasn't been done in, let's say, X amount of years, or they haven't seen it done in their lifetime, it's very nerve-wracking. This entire move, when we're seeing the S&P 500 shoot up the biggest day we've seen since 2008, dump as hard as we've seen back in 2000, people are again going left and right. It's not really even from tariffs. It's coming from emotional traders of uncertainty. Hey, all we can do at this time is basically say to ourselves, which way is the market truly going to go? Well, all I have is this, essentially Stocktwits. All I have is CNBC. All I have is this or that, where again, people are trying to figure out where is the market going to go. What we can do at this time, and all we can do at this time, is take every single step, every single pullback as an opportunity to be able to profit. Now, I know there's two types of investors in this market. When the S&P 500 went all the way from 610, 615, and dropped all the way back down towards around 580, people started freaking out, or 480, excuse me. People started getting nervous. To me, this was an absolute gift. For anyone who does not know, I again jumped in back on last Monday. Last Monday is when I pulled the trigger over on my long-term investment portfolio. And I got in on this play for one reason only. It's because the market has finally started fading, dropping, and getting weaker. Now, I want to be able to bring up a few different images right here And let's just go with, average recession, right? Drop. Let's just think about this. What is the average recession drop? What are we seeing when we have a pullback in the market? So I'm going to save this image here and we can bring it on over and talk about it. But I want this image right here to really stand out. I really want this image to be able to be an opportunity for you guys to be able to understand how the markets work. You can see in 1970, the stock market fell 36%. In October of 1974, the stock market fell 48%. In 1980, the market fell 17%. 1982, 27%. 1990, 20%. 2002, 49%. 2009, 57%. And March 2020, 34%. Traders, how many people here wish they bought in on the dip in 2020? How many people here, obviously, maybe some of you guys are a little bit too young, including myself, but said, man, could you imagine if you bought in at the bottom of 2008? Guys, I do not know where the exact bottom of 2025 is going to be. And there's a chance that it goes way lower. But you know what I'm going to do is I'm going to look at these averages and I'm going to say to myself, let me surround entries with amazing opportunities. We have a serious problem when it comes to investors. Investors love to chase highs and they love to run away when it's the best bargain price. It makes no sense. It's almost like, again, when we take a look at all these plays. And let's go back into a large time frame. We go back into a larger time frame right here. First things first that I'm going to state is, again, everyone is freaking out about a month ago. No, not even a month ago, probably 3 weeks ago. Everyone just freaking out, seeing the markets fade and drop and get weaker. In all reality, all we're doing is coming back on down, giving back about the last 11 months. How was your life 11 months ago? Was it okay? Was it good? Guys, that's what we're just giving back at this time. It's not like the market's all the way down to 200 giving everything on back. The market has faded and fallen after an extremely hot last 2 years. 2023 was absolutely spectacular. 2024 was absolutely spectacular. When I'm seeing a pullback, I understand and I realize that these are, again, normal pullbacks that are going to happen. The best thing you can do to really get an understanding of how the market works is go into a monthly moving average time frame. And when you do that, you can see right here the S&P 500. How does it react? Well, the S&P 500 on a normal reaction, a normal way, we are going to have a nice slow and steady climb. We know this, right? We know from the time of 2008 probably till about 2018, 2019, we've just been on a nice slow and steady 10% average. But then guess what happened? In 2018, Jerome Powell came on out and raised rates. And we had a pullback. And a pullback's going to happen. But notice, where did we bounce off of? We bounced off of perfectly right off that 50-month moving average. Then guess what we saw? We saw a nice explosive move until 2020. And then what happened in 2020? That time that we couldn't touch each other, that time that you got to say, hey, stay away from me 6 feet or you'll die, right? Basically, what did we come on down to next? We had a very big pullback. What happened? Well, guys, the market started fading, falling. People were uncertain. People didn't know what was going to happen, right? There was uncertainty in the air. And when there's uncertainty, there's fear. And when there's fear, no one wants to put their money out there. So again, Jerome Powell came on out and he said, hey, we're going to be cutting interest rates. Hey, we're going to send every company, every person, every family $1,500, right? Go ahead. And instead of, again, using it for bills, people are buying MacBooks. People are buying expensive cars. People are just spending money on NFTs, pictures of monkeys. And the market absolutely exploded. And then as the market got a little too high, the market corrected. Right? We had to raise interest rates. Then, of course, what started happening? People started saying, hey, you know what? We're getting excited about the fact that we're going to be cutting interest rates soon. And the market exploded again. We can clearly see that there's a pattern. The pattern is pull back when the market gets too extended, be able to rip and run. Pull back when the market gets too extended, rip and run. Pull back when the market gets too extended, rip and run. And right now, guys, this is just following the normal pattern. This should not be a time of fear. This should be a time of excitement. This should not be a time that you run away. It's a time of opportunity. This is a time that I want you guys to be able to get involved in the markets. So if you're just taking a look at this image right here and you're asking yourself, what is the best area to go ahead and pull the trigger? I've gone over this and said that this multiple times to, again, my community, is I let you guys know right here is the time that I think would be perfect. And where is that? That's the monthly moving average. 50-month moving average, 50-month moving average, 50-month moving average, 50-month moving average. That would be the best entry that we could get at this time. Now, traders, for anyone who does not know, again, we already looked at this image. This image shows a 36% pullback, 48%, 17, 27, 20, 49, 57, 34. What have we fallen so far in the S&P 500? We did fall into bear market territory. And what is that? Over 20%. Over 20% is when the S&P 500 fell on down towards the price of 481. Now, guys, there has been so-called recessions when we only fell 17%, where we only fell 20%. But then there are so-called recessions of 57%, 49%. For anyone who does not realize, the average recession, average, out of all the recessions we have, would be a 36% drop. 36% or 36% pullback. Now, where would a 36% pullback put us? It would actually put us right around the price around 390. That would be a very large pullback, being able to get a drop back on down towards that region. But what we have seen, what we have at this time here, guys, is we have noticed that this area, this blue line, has been spectacular for about the past 15 years. Even if we want to draw this back a little bit, because you can see my charts right here, not even drawing this all the way on back, it does even line back up towards around that 2012 mark. So remember, I do not know where the bottom's going to be, but I know after we have this pullback, expansion is always so much farther. Let's just go to average, recession to expansion chart, and let's just see what we can find. Now, when I say expansion, what I'm really referring to is the pure fact that after we have these pullbacks, people always miss out on some of the best opportunities. Guys, this is history in the stock market. Let's see, recessions are painful, but expansions have been powerful. Notice what we have here. What if someone could tell you that you could get involved in these little red dip buys before these monster moves? It's crazy, guys. It's crazy the fact that whenever we have a little bit of a pullback in the market, people say, I don't want to trade anymore. I'm done trading. Oh, this is the worst market I've ever seen. Guys, are you nuts? Are you taking crazy pills? This is the time you start loading up on your accounts. So again, if we know that an average pullback is going to be about 11 months, average pullback is going to be 11 months. Average pullback is going to be a 36% drop. And then after a recession, after 11 months, after, again, the average drop of 36%, we have 1, 2, 3, 4, 5x of that. You better believe I am absolutely loading up the boat whenever we come back on down towards these areas. You could see every single time, 1953, 1958, 1961, 1972, 1970, you get monster expansion. Guys, don't sit here and be like, well, Deck, this time's different. I was like, oh, Decky, this time's different. This time's different. You ever see no, we've never had tariffs before. This time is a lot different. No, it's not that different, okay? Guess what? People said it was different in 2020. And people said it was, and yes, that's how I imagine people who, again, rebuttal this. That's how they sound. That is 100%, that's how they sound. So the thing is, if you, again, are saying this time's different, sure, it's different than, again, it's tariffs. Sure, it's different as, again, we're not all wearing masks. Sure, it's all different than, again, the housing market's not crashing. They're all different, but do you not believe that the stock market's going to recover? Don't fall into headlines. Don't fall into fear. Don't fall into uncertainty. No, and have confidence that the market's going to drop. So how am I going to be getting involved? First things first, I did get involved on the S&P 500 at the price of that 493 mark. So I had my first entry over on my long-term investment account over at 493. Now, again, why did I do this? Because remember, I'm not a fortune teller. I don't know if the market's going to drop 20%, if the market's going to drop 30% or 50%. I really don't know. But you know what I'm going to do is I'm going to get in whenever we're down over 20%. I'm not going to be a person that sees the S&P 500 go from 615 all the way on down towards the 15-month moving average, almost a 480, fall 21% and not pull the trigger in any sort of way. Not pull the trigger in any sort of way. Are you kidding me? That would be absolutely ridiculous if I missed out on. So whenever we fall over 20%, I am going to at least give it a chance, right? That's what was so big to me. That was so important to me. Now, after that, ladies and gentlemen, what do I want you guys to realize? What do I want you guys to see? Is add every maybe 7% drop, 20% get in something, 27% get in something, 34% get in something, right? Let's just keep averaging in. And if we average in, let's say we get our first entry at the blue line, we get our second entry here, we get our third entry here, and we have an overall entry right around that 50-month moving average, guys, we are going to be set up for success. Do you not really truly believe that Apple is going to bounce back on up? Do you not believe that Nvidia is going to bounce back on up? Trust me, guys. Yes, the market can fall. Yes, the market can drop, but we will be able to see recovery. That's the way, again, the market's working. Over the last 2 years, the way that people have been spending, right? That's how nuts it's been. Guys, AI, artificial intelligence. We know you just say the word AI and the market explodes. You say the word AI and again, we go on the next leg. Things absolutely take on off. Guys, let's not again be just like blatantly ignoring the fact that again, you come up with the word artificial intelligence in 2023, 2024, the markets just absolutely fly. Not only that, people got excited about everything. People were willing to spend money. The sentiment was, let's spend money. And where was the sentiment, guys? Well, it could come on down to obviously Nvidia. Nvidia was the stock that seemed like it would never fall, never drop. But again, here we are, sub again $100 stock before we spike back up towards around that 115 mark. That's pretty nuts. That's pretty crazy to be thinking about. Then again, what else do we have here? Well, we also could be saying, what are the different trends that developed? Well, guys, we had AI, right? Hot chips develop. We also see, again, data centers, right? VST, Nancy Pelosi's play. That stock went absolutely crazy. Remember, we also saw quantum computing. That went absolutely crazy. We saw, again, IO and Q. That went crazy. We also saw space exploration. Rocket Lab. That went crazy. Redwire, again, being able to build space parts. That went crazy. We also saw nuclear plays. How are we going to power all this AI? We saw BWXT. That started going on a nice rip. OKLO. That started going on a nice rip. We are in a different time than what we were in 2024, where we saw a lot more spending, we saw a lot more craziness, and we saw a lot more wild moves at the end of 2024. But please do not, again, take this opportunity to kind of sit out. This is the opportunity that you want to be able to, again, jump on in and get yourself to be able to make some money. The issue is, and I see it because I've been doing this for 10 years now, okay? I've been doing this for 10 years. People, again, do not buy when things are at low. They buy when things are at the top. They buy when everyone else says, oh, you're not in? Oh, you're missing out? Oh, don't worry, you're still in early. You're still in early. Guys, I don't mean to, again, be making fun of you're still in early traders, but I've been around the circus here. I understand, again, the way things work in the market. Usually, again, my number one indicator, okay? And again, I apologize, Dad, if you're listening to this. But my dad does not listen to, does not follow any sort of stocks whatsoever. My number one indicator is when my dad randomly calls me and he goes, hey, have you heard about GameStop before? Yeah, I heard it's, that's when GameStop's spiking, it's time to sell. When people do not know about certain plays and then they start hearing about it, it's time to sell. It's time to move on, right? It's like when, when Bitcoin's all the way up towards 110,000 and all of a sudden, random people are hitting you on up, asking you, oh, what do you think about Bitcoin? It's like, you don't know anything about Bitcoin. Yeah, I know, but I think about buying right now. It just broke 100, time to sell, right? Time to move on. Right. So once things get overpopulated, once things get overcrowded, once things move up a little too high, right? Guess what? That's where everything is usually going to start selling on off. Things do not go up forever, and you got to take advantage of these dip buy opportunities. So let's really focus on right now, though. Let's focus on today, moving forward. What do we have? What do we want to be looking at? Well, very easy way just kind of get, an understanding about today, traders, is let's head on over to Foxrunner here, and let's click over to the news alerts. Now, when we go over towards the news alerts, we can actually scroll on down here, and we can see right here the S&P 500, breaking it down into detail. So Foxrunner is the news scanner that I use every single day, but it says breaking down the S&P 500 in detail. Over the last 3 months, the S&P 500 has been more volatile than we have ever seen, with an average move of 2.5% per day. In simpler terms, on average, the SPY would move $3 to $6 per day on a normal trading session, but so far in April, it has moved on average over $12. Let's just take a second right here, guys. On average, the S&P 500 moves around anywhere between $3 to $6 per day. That's what it usually does. So usually we might see a move from 535 up towards, again, 537, right? We usually see that. Right now, we are seeing on average $12 moves. When you guys take a look at the markets, we are usually seeing anywhere between the Dow spiking up 800 points to 3,000 points. I mean, that's how nuts things have been. So it says at this time, investors, Wall Street, hedge funds, etc., don't really know what's going to be happening next. This is a time of emotional trading where investors are trading based off hopes and fears. So let's get a better understanding about the markets. For us to understand where the markets might reverse, we will need to understand support and resistance and where it's currently at. Please use the chart below for future ideas. So I took a little screenshot of this, guys, and let me again grab this and bring it on over so that we can kind of dive into detail a little bit more about this. So I know at first glance, this is a little bit confusing, but as of now, this is how you guys need to plan out your S&P 500 trade. So the S&P 500, how do I like to do this? I like to go over towards this, guys, switch on over to about a 30-minute time frame. 30-minute time frame. Why 30 minutes, right? 30 minutes is going to give us a lot of detail. It's going to give us detail, but relevant detail. Right? It's a large enough time frame where I'm not in on a 1 minute time frame. A 1 minute time frame on the S&P 500 just isn't going to do anything for us. There's not enough, we can't see enough to actually grasp support and resistance. We need to go a little bit farther back. A great example of this would be, imagine if you guys, get a text message and you try to read the text message with the phone in front of your face like this. You just can't read it. You can't read when it's this close. You have to take a little bit of a step back. Now, if you go too far back and you're all the way back here, you might be squinting. You're saying, I don't know what that text message says. You got to find the right little time frame to be able to actually read the S&P 500 the right way. So 1 minute is just a little bit too close. When you go back to a monthly time frame, again, monthly is great to kind of get that perfect entry that we said, but it's not giving us detail on today. So if we want to get good detail on today, let's look at relevant areas of support and resistance. Now, let me just clear off these indicators here. So the S&P 500, here's again our relevant areas. Now, how is this relevant? Because it's relevant because we get to see 1, 2, 3, 4, 5, 6, 7. Basically, the last 7 days of true volatility, the last 7 days of true action, the last 7 days of true of where reversals have been. Now, let's go ahead and break this image on down. And let's talk about, because this is the same image right here to right here. This is the same image. It just comes on down to actually understanding where the S&P 500 will be going next. So what do we have when we take a look over on this image? And I might just move myself off to this side here. There we go. And just so you guys can see it a little bit better. Now, what do we have? First things first is let's start off with the very top and let's start off with the very bottom. We can see that 485 is the bottom support line. So let's say worst case scenario, market starts dropping, fading, falling, everything starts getting very ugly. 485 is the bottom support line. You guys can see dip by bottom support, dip by bottom support, dip by bottom support, dip by bottom support. We can all come into an agreement that 485 is where the S&P 500 has its bottom support. Sure, there was the low when it came on down towards around 481, but I'm just saying in general, 485 is where the bottom dip by is. You can see the very tippity top, right? Tippity top right here. 571, top resistance, top resistance, top resistance. 571 is going to be the next top target. Now let's kind of go into a little bit more closer detail. We know the bottom, we know the top. We can see that we have what I would say light support. Light support is going to be an area that definitely could be holding up as the next bounce play. Essentially, we want you to be aware of it. Now, where are we getting these prices from? What we're looking for is where has there been reversals in the past? When there has been reversals in the past, there could be reversals in the future. So what can you see here? Long lower shadow, nice bounce play. Top resistance, broke above it, bounce play. Large again, pullback, bounce play. 510 is where we would have our light support line. 510 is where we have a great dip buy opportunity right off this area. Then on top of that, we have our stronger current resistance, 549. You can see bounce play, top resistance, top resistance, top resistance, right around that 550 natural resistance. And then you do have your uptrend at this moment, right? And you have this uptrend that has bounce, higher low, higher low, higher low, higher low, higher low, and then you have this setup. So if you guys need to, take a screenshot of this image right now. And the reason why I would say that is because I want you guys to be able to understand, okay, hey, when something's coming on up, these are going to be the next key points of where the reversal's at. So again, are you guys taking a picture? I'm in the image right now, so hold on. Okay, now take the picture. Now take the screenshot. Okay, good. Now, the S&P 500. The S&P 500 right here, traders, you guys can see the higher low setup. The S&P 500, you can see where we're at. So what do we have on this current moment? 540. So this morning, we're at 540. So what I would be saying if I were you is, okay, we have room to run up towards 549 today. We also have room to drop, it seems like back on down towards around 531 today. If you're at, again, that 540 mark right now with a little bit of a gap up, we have room to run up to 550. We have room to fall back on down towards around probably that, 529 area, right? So understand these chart setups. Or if you want to, go over to your chart and now, again, go ahead and draw these on in and try to replicate the same exact thing. So again, if we want to copy this, we could draw this in right here, boom. We can go ahead and copy this, replicate this right here, boom. And we could just start with this. We just start with this at this time and say, okay, hey, 530 is bottom support. 550, top resistance. Okay, Deck, how do I want to trade this? Well, again, I like to keep my trading very simple and straight to the point. Guys, I'm not going to sit here and I'm not going to say to you, oh, how do I like to trade? Oh, guys, I like to be able to trade by understanding, again, the VWAP crossing over, again, the Ecomi clouds. And again, if the flux capacitor, again, goes off the average of, again, the DWAP, it's like, just keep it simple, right? You probably have heard that acronym before, KISS. Keep it stupid simple, right? Here the market bounced. Here the market bounced. Here's resistance, here's resistance. Here's a bounce play, here's a bounce play. Where do you guys think the next dip buy or bounce play is going to be? Probably off that line right there. Then on top of that, what else do we have at this moment? We have top resistance, we have top resistance. You can clearly see that. We also have top resistance. You guys can also see top resistance. Where do you think the market's going to turn at? Market's probably going to turn off right here. guess what? Look for put contracts or look for shorts on the S&P 500 right here. Or again, look for dip buys or look to be able to get in on bounce plays when the S&P 500 comes right here. Most likely, we're going to consolidate inside this area. Now, if the market breaks out of this resistance line, notice what's going to happen. Stop losses are going to get hit. If stop losses get hit, if from shorters getting out, put contracts moving on, guess what we could easily see? We could easily see that next leg on up. If we get that next leg on up, how high can we be able to go up to? Well, as you guys know, looking at our next target, it's going to be up towards around that 570 mark, as we talked about. So now, again, we're getting a great understanding of what the S&P 500 can truly do to us, right? And be able to understand what could be happening next. So again, shout out to Fox Runner for that information here. We could see right here, guys, why is the market gapping up though this morning? Like, what's the reasoning? Why is the market gapping on up? Let me move myself back on over towards this side. So what we have at this time, it says the president pardons phones, computers, and chips. Okay, so President Trump exempts phones, computers, and chips from new tariffs. Smartphones and computers will be exempted from Trump tariffs, reciprocal tariffs. Trump earlier this month imposed 145% tariffs on products from China, a move that took a toll on tech companies like Apple, which the guidance includes electronic devices and components. So guys, if Trump is saying, hey, all the tariffs that are going on right now, we're going to exempt phones, computers, chips, guess what? What companies are going to be able to really benefit from this? Apple, NVIDIA, right? TSM, Intel, Dell, right? You guys need to understand this and be able to say, all right, if Trump is doing X, what Y is going to move, right? If A happens, what is going to happen with B? Apple, watch it today. NVIDIA, watch it today. TSM, watch it today. INTC, watch it today, right? These are all great plays that you guys definitely want to be aware of. Right, you guys come on over towards Stocktwits as well. We could see, come on over here and look at some of these plays with Apple, right? Apple's already having a nice gap up this morning, 5.48%, already gapping up, $10, right? Bullish sentiment across the board, right? Which way is Apple? Again, next 20% move. I'm going higher right here. And how can I not go higher, right? Because now, again, the president of the United States, basically Trump right here, which, again, I don't care which way you think of him, good, bad, left, right, love him, hate him, don't care. There definitely has been the pot being stirred a little bit, where we know we have a lot of volatility. That's not only in the United States, but that's global markets. That's, again, the entire trade. And I'm saying, hey, you know what? Now go ahead. You know what? We're going to allow chips. We're going to allow phones. This market could be able to shoot right back on up. Do you know what's another very crazy thing that I want you guys to realize? Do you guys want to know another very crazy thing that a lot of people don't think about? Do you guys truly believe that the market would ever fall down 30, 40, 50, 60%? No. Guys, if the market ever falls into a recession, if the market ever falls into any sort of drop whatsoever, what would we do? Well, I will tell you right now, it would come on down to one person and one person only. And you might know this man. I like to call him Uncle JP. Who's that man right here? That is going to be Jerome Powell. Look at this guy. Look at this guy right here. Brown eyes, beautiful tie, 42 long. Traders, when we take a look at this guy, if the market ever fell all the way back on down 25, 30%, 35%, what do you think they would do? Guys, same exact thing they did back in 2020. They have something very important in their back pocket that they can use at any moment. The moment that they say, hey, we're actually going to start cutting interest rates. The moment that they say we are going to start cutting interest rates, traders, the markets would explode again. The markets would explode again. For anyone who does not realize this, when you guys take a look back in 2020, and the market was dumping. We saw like a 25% drop in the matter of 2 months. What happened? Jerome Powell came on out and said, hey, in basic terms, elementary terms, right? He came on out and said, hey guys, we're just going to kind of like make everything free. Like just stimulate the economy. That's essentially what he did. Dropped interest rates to barely anything. Let's send people money. People are buying houses, buying cars, buying pictures of monkeys, NFTs. People are buying anything, right? And the market absolutely exploded. It went from being down 25% to ripping and running like 30% on the year. Almost like a 50% move total from bottom to top. Traders, guess what? We still have not got our big interest rate cuts. If this market fades and falls and drops and gets weaker and weaker and weaker and weaker, and this market starts getting ugly and ugly and ugly and ugly, what could we do at any moment? At any moment, we could literally just say to ourselves, hey, let's go ahead and start cutting interest rates. Now, obviously, again, Jerome Powell wants to be able to bring inflation down to 2%. That was their goal. Inflation was at 9.1%. Inflation is now sitting at 2.4%. They want inflation to get to 2% before they start cutting interest rates. But if the market ever started falling 25, 30, 35%, guys, guess what? Probably, again, people wouldn't be spending that much money to begin with. inflation would fall, we cut interest rates, we'd bounce right back on up. So do not fear that we're going to fall into a Great Depression. Do not fear we're going to fall into a Great Recession, because we literally have a secret weapon in our back pocket anytime that we need it. Okay? I want you guys to truly understand that right there. Now, what else I want to be able to go over today, guys, because I wanted to go over the S&P 500, give you guys an idea, give you guys entries, give you guys targets, give you guys a clear-cut understanding of what's going on. Tariffs are happening at this moment. We know, again, this morning, Trump has pardoned or exempt phones, computers, chips. We could easily be watching Apple this morning. That's why it's having such a good gap up. Easily be watching NVIDIA this morning. That's why it's having a big gap up. But let's go over, again, my personal favorite stuff. Right? I want to go over my favorite plays this morning, my favorite stocks right here. Now at this time, little heads on up, it is 8 in the morning. So my favorite thing to do at 8 in the morning is actually take a look at anything that might be spiking and ripping and running at 8 o'clock here. Now, it does not seem like we have a lot of news at this time, but let's just see here, traders. Is anything coming out that's brand new that's starting to rip and run? Recently in this market, we have not been seeing a ton of hot action or a ton of hot activity. But the way that I like to trade, for anyone who does not know, I'm going to break it down, make it very simple, very easy. I, again, personally love trading off of hot news. The reason why I love trading off hot news is because I get in first. So many people, and I will tell you this right now, my average trading day, I end it at around 9:30 in the morning. You might be scratching your head and being like, what do you mean you end your trading day at 9:30 in the morning? The stock market doesn't even open up till 9:30 in the morning. So what I do is I watch this news scanner. At 7, 7:30, 8 o'clock, 8:30 is when the hot news comes on out. We can see, okay, hey, we have approval. AIMD just came on out a few seconds ago, receives a contract. These plays can easily get hype. These plays can easily get momentum. Some of them do get momentum. Some of them do not get momentum. But like right now, I don't think we're seeing too much spike at this time. But usually what it comes on down to is hot news leads towards a big spike, leads towards a big rip. For instance, take a look over on like BULL. BULL, right, as you guys can see, has gone from $10 and has spiked all the way up to $41. Guys, that is absolutely insane to be thinking about, right? Take a look over on THRD. THRD went from the price of $3.60 and has spiked up to $5. For anyone who does not know, the money is made in pre-market. Why do you think I wake up every single day at 6:30 in the morning, 6:15 in the morning? Because the money is made in pre-market. You guys should be trading before the start of the day. Before the start of the day is where the big money comes on out. So many people wake on up and they say, oh, I want to buy THRD right now. Guys, THRD has already spiked up 37%. Oh, I want to buy BULL right now. BULL already spiked up 150%. So this is the secret. Okay, I will tell you exactly the right way to trade so every single person can be able to replicate it, copy it, and make sure that you guys are all set, ready to go here. I will literally just give you guys the secret sauce. You guys don't got to buy a $10,000 trading course from a random 18-year-old sitting on a side of Ferrari on TikTok. Okay, this is literally the way that you guys can make money in the stock market every single day. Okay, so number one is, again, wake up early. Now, again, Deck, what time do you have to wake up? You got to probably wake up around 6:30 a.m. Eastern time. Now, if you guys are on the West Coast, you might say, well, Deck, that's 3:30. Well, the good news is you get to go back to bed after you're done. So, hot news. Hot news comes on out every single day at the times of 7 a.m., 7:30 a.m., 8 a.m., and 8:30 a.m. Eastern time. That's the time that you guys want to be watching your scanners. Now, why are we looking for hot news, or what are we looking for? We are going to be looking for 3-star to 4-star words. Now, when I say 3-star to 4-star words, these are words that are going to make stocks spike. These are words that are going to make stocks rip and run. This is what I'm referring to right here. You guys could see that there is a star, right? Hot press release keywords right here. What we have here is if there is the word positive endpoints, top line data, significant, demonstrates, treatment, agreement, cancer, partnership, improvements. If there is these words right here, these words make stocks spike. These words make stocks go on big time rips and runs. For instance, you might see a great press release, a press release that says there is positive top line phase 3 data. If you see the words positive top line phase 3 data, a stock is going to go on up. If you see a stock says, hey, we have approval for a fast track, you're going to see a stock go on up. You might see our stock XYZ has achieved successful results and has a partnership with NVIDIA. You would see a stock go on a very big spike. Every single morning, we see stocks before the stock market open go on 100, 200, 300% rips and runs. Now, if you can be a master, if you know what to look for, you are about to have your life changed forever starting today. And this is what you guys want to do when it comes on down to this. Number one, study these keywords, right? You guys have all these keywords right here. It's over on Fox Runner as well. You guys will be all set, ready to rock and roll. You guys will be all ready to go. Now, what I like to do is you can also add any keywords you want that are highlighted. So personally, I usually just write out all the 3-star words right here, and they will be highlighted whenever, again, they come on out. So we know there's a lot of news. There's a lot of press releases out there. I want the best of the best highlighted. So anything I see in gold will be the word positive, top line results, groundbreaking, successful, right? There's a few other ones, and also have things I don't like in red X's, potential, maybe, upcoming meeting, offering. These I stay away from. These I don't like, right? Now, there's so many different types of news. There's so much things going on here. How can I filter this on out? What you want to do is let's look for news only, okay? And then also, let's look for lower floats. 0 to, let's just say, 20 million and under. My thing is just kind of do 17 million and under. Now you might say, Dek, why again low floats? Low floats, all a float is going to be the lower the float, the harder the spike it can go. So basically, the lower the float, the harder the spiking can go. This is very simple, basic, easy stock trading. The rule of thumb is, again, 5 million and under will explode, right? But we can really trade anything that's 20 million and under, okay? So what I'm talking about right now is low float, great credible, hot press releases. For anyone who does not know, guess what? Let's take a look at some previous examples right here. JNVR. JNVR last week went from $4 and spiked all the way up towards around $60. If you guys were not here last week, NAOV. NAOV went from $2 and spiked up towards around $16. You can see how these crazy rips and runs, these crazy spikes are happening, right? Right now at this time, we don't have any super strong news this morning, but we do have BULL. And then you guys can also see THRD. You guys can also see AREB right now. So what we want to do every morning is we have to wake up, get up at 6:30. So again, you're prepared and ready to rock and roll. 7 a.m., 7:30, 8 a.m., 8:30 is going to be the hot news. We study our 3-star, 4-star words. We know the lower the float, the harder the spike it can go. Now, this is why I like to do this, okay? This is, again, my whole reasoning on why I like to look for hot news. How many people here have ever seen a stock go on a monster rip, monster run, monster spike, and it seems like the moment that you buy in on it, it goes the opposite direction? I feel like that happens so much, where people constantly buy at the top. People constantly get in late. So what I like to do is I like to say to myself, there are 3 main areas that you can trade. First area that you can be able to get involved in a play. Let's just again imagine that this is a spike. The first area that you can get involved in a play is going to be number 1, right off the rip. This would be if you want to be a press release trader. You want to get in for the breakout right away. If we watch the news come on out, guess what, traders? We see the news, there is going to be very limited risk. If we see stock, let's just think about this right now. If we see stock XYZ come out with a press release that says we have positive phase 3 data, which is, again, great data. We have positive results. We just have a partnership with NVIDIA. Do you really believe that, again, the stock would fade and fall? Do you really believe that the stock would drop from there? The answer is no. Really, the only thing that stock is going to do is be able to move on up, be able to go on a great rip and go on a great climb. When stocks come out with hot, good, credible news, no one sells off the stock. The stock only moves on up. So when it comes down to stock trading, it is first come, first serve. If you can get in first, if you can beat the mob, if you wake up a little bit earlier, you can be able to get involved in these plays. And I'll show you guys how in a second. So again, being a hot press release trader is about, number 1, understanding the time. 7 o'clock, 7:30, 8 o'clock, knowing what the keywords are, knowing what to look for. You can add your own certain keywords, and of course, having low floats. Then you just watch the news scanner. When you see a 3-star word or a 2-star word, you can pull the trigger and be able to make some money, right? Look at this, XAge right now. Guys, look at what just happened. This is a great example. Look what just happened right here. XAge. What's going on at this moment? Now, again, please note, this is a very smaller play. I'm not the biggest fan of trading sub $1 stocks, but this is a great example, at least what I'm talking about, right? XAge just came on out with a press release at 8:03. It went 8:03, 8:04, 8:05, 8:06, 8:07, 8:08, 8:09. Traders, guess what we just saw happen right here? You guys can see XAge came on out at 8:03 and 47 seconds. 8:03 and 47 seconds. Just happened. 8:03, 47 seconds. You're looking at news, 3-star word. What do we have right here? It says Longevity Health announces execution of merger agreement. Now, what's so big about this? Well, agreement is a 3-star word. We are having a 3-star word off a 1-star word, merger right here. Agreement is one of my go-to words as well. You guys can see an agreement, little handshake right here. And guess what happens? That stock is now going on a spike. We saw a 3-star word during a hot time at 8 o'clock. If we're looking at the news scanner, bada boom, we could pull the trigger at 15 cents, 18 cents, 20 cents, and we have all this money to be made. Do you guys see how crazy this is? But now again, let's go to the next step here. The next issue though, is now this is when the majority of traders start trying to come on in. Now, maybe in like 5 to 10 minutes from now. But we could either had our first entry. The issue is a lot of people now start buying here. Traders, if we bought back here, what was our risk? If we were again ready and prepared, our risk is this. If we buy up here, our risk is this. And this is why I say first come, first serve. The earlier you get in, the less risk you have. The earlier you get in, the more reward you're going to have. So that's what I want you guys to note. So really, when it comes down to stock trading or a day trading, especially let's say micro caps, anything that is like $10 or under, right? You want to get in first, or you want to understand, okay, I cannot chase the tops. If you guys watch me trade, I live trade every single day. If you guys watch me trade, I always avoid getting in on tops. You can buy in 100% on entry number 1. But what's entry number 2 is actually shorting, betting against these plays. These plays, guys, go on 100% rips. They are going to give a lot back. So guess what? What you actually want to do is not buy the top. You want to short the top because the stock most likely is going to start fading back on down. And then your entry number 3 would be a possible dip buy opportunity where you can get filled and go on a dip buy. I will tell you exactly what the normal trader does though. The normal trader does this, okay? The normal trader sees stock, let's say XAG or XYZ or whatever stock you want to see. The normal trader sees stock explode on up. Stock explodes. They say, whoa, 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 this stock's looking great. This stock's doing amazing. I can't wait to buy. Okay, it just went on a 100% spike. Guys, I'm buying. And they buy right here. Guys, the stock is now up 100%. You just bought in after a stock just ran and ripped. So why did you wait so long? Well, I wanted to make sure it was going to spike. You can't do that. You can't have your visualization. You can't have your eyes be the reason for you to jump in on a play. You have to trust your skills. You have to trust the press release. You have to trust the low float. You have to trust the chart pattern, the volatility. You can't wait for it to spike 100% before you start feeling good about it, right? You can't do that. So the thing is, you can't buy in there. You have to be one of the first people in. Now, if you are late, you have to say to yourself, all right, I'm late. Let me look for a reversal. Let me look for a short. And as the stock again fades and falls and starts dropping back on down, now you profit as the stock fades and falls. Then you can look for a dip buy. But the majority of traders do what? They say, hey, Dek, I'm buying in right now. And then it turns and falls and fade. And they say every single time I buy a stock, it does opposite of what I want. Then the stock starts turning, falling, and fading, and then you get out, right? You say, fine, I'll take my loss. I'll get out. And then moments later, guess what happens? It bounces back on up. Who here has ever gone through that before? Who here has ever been in that situation before? Who here has ever said, Dek, every time I buy, it goes on down. Then I get out and it bounces right back on up. You know why? Because you're buying at the top. Then you're getting out when you're, again, hitting your pain. But at the same time, that pain is usually where dip buyers now move on in. So start thinking differently about your plays. Don't buy a stock after it's already ripped. Short the stock after it already rips. And if it comes back on down, look for the next support line on a possible dip buy and bounce play. That's where you're going to be able to make your money, and that's where you're going to be able to make your profit. For anyone who does not know, buying in pre-market is very simple, very easy, a very easy way to be able to trade. When you guys are buying in pre-market, all you guys have to do, just a little heads on up, is switch on over to your ARCA tab. So in pre-market, you guys can trade every morning. I know there's going to be people in chat that says, Dek, I can't trade it in the mornings. I can't trade in pre-market. Yes, you can. All you have to do is either switch to the ARCA tab, or you might have EXT, which stands for extended hours. Then all you can do is limit orders only, okay? So it's going to be market, or excuse me, it's going to be ARCA and limit orders only. So let's just say an example, right? Like bull, right? Bull right here. Right? Bull right here. This is a stock that went from $15, shot on the way up to $41, currently sitting at $27, right? If I type in on bull at this moment, right? And I'll bring this on over here so you guys can see it all, right? Here's my orders, right? Bull at this time. Bull is fading and falling. Bull doesn't have like too much going for it at this moment. Did go on a beautiful spike this morning. But the thing is, if I'm in on like a normal, whatever, LSPT or whatever you're sit on, you're on a market order and you say, Dek, I want to buy, let's just go at 5 shares of bull. And you say, okay, I'm ready to go. Nothing happens. Nothing is going to work here, right? But if you go over to limit order And now you go over to ARCA, and now let's say you say, all right, Deck, I want to be able to get in on this play. Let's just put a dip buy at 26.50, right? You can go ahead and wow, look at that. Now I have a live order ready to go at 26.50. So you can trade before the stock market opens. You can get involved in these plays before the market opens. So many people sleep during the most active time in the market, guys. Most people sleep during the most active time of these trades. So I want you guys to be able to start waking on up early. And this is great for, again, the person that can't be a full-time stock trader. You can trade before the market opens, be able to nail, let's say, the next 100% mover coming up in the next 15 minutes over on XAAG. You can be able to nail the next BULL. You can be able to nail, again, last week's #1 crazy spiker. Guys, we had a couple big crazy spikers last week, but if that was NAOV, that went from, again, the price of $2 all the way up to $16. Or if that was, again, RGC went from, again, $3 all the way up to $69. Or if that was a couple other big ones, again, just so many go through my mind at this time. I want you guys to just be fully aware that that's the secret sauce every single day. So every single morning when I'm waking on up here, guys, the S&P 500 is what I always start off with. I always look at the S&P 500. We went over our entries, our exits, what we really want to be focusing on, what we're looking at over on today. Then on top of that, guys, after I get a good understanding about the market, I'm focused at 7 o'clock, 7:30, 8 o'clock, 8:30, looking at my smaller press releases. If that's BULL, if that's XAAG, again, great example. Now, in the next 14 minutes from now, we're going to have another 8:30 press release wave. And at that 8:30 press release wave, let's look at it together. Let's just watch it together. 8:30 is when we're going to be probably wrapping this on up. But let's just get kind of like a final little fireworks here to see, again, if we could be able to get a spike and rip and run at 8:30. We can make a live trade on this show right now. Are you kidding me? Make a live trade right here with the squad. First time on Stocktwits Nation. How you feeling today? I'll tell you right now, if you guys are joining the show over on Stocktwits, if you guys are over on Tradecaster, if you guys are over on YouTube, if you guys are, again, rocking and rolling with me, man, I hope you guys are feeling good. Smash that thumbs on up. Hit that retweet right now, guys. I'm getting hot and warm and toasty in here. I'm feeling a little aroused, a little sexual, to be honest, guys. This Monday morning. Spring is in the air. Oh, man. It's like a golden retriever territory in here. Guys, let's get ready to go. And I hope you guys are having as much fun as I'm having on this day as well. So it is absolutely great, absolutely awesome. And I hope you guys are jacked on up on this day as well. So, team, 817 in the market. Let's again see at this time what is trending over on Stocktwits. Let's actually go ahead and break down some of the most trending plays at this moment and see, is there a reason on why they're trending? So best plays that we have at this time over on Stocktwits. We have VKTX, PFE, SKGR, Goldman Sachs, Palantir, Traders. Palantir is still obviously one of the most popular plays here, but look what's also coming up. Dell. Traders, as we already talked about earlier this morning, why is Dell moving up so well? Guys, didn't Trump just do that pardon? Didn't he just do that exemption? Saying, hey, Dell at this time, guys, computers, right? We could easily see like Intel. But what is going on with VKTX at this moment? Let's go ahead and break this bad boy on down. VKTX, #1 trending over on Stocktwits here. And VKTX actually, again, at 645 started ripping and running. Now, what do we have? What is the reason? What is the credibility right here? When we take a look over on VKTX, taking a look over on this, do we have any sort of big news? I am not seeing any sort of news as of today. Today is the 14th. VKTX just started ripping and running from, again, $22 up towards around $26. Let's double check this. See if there is any sort of credibility elsewhere over on VKTX on why this play is starting to get this climb, starting to get this rip and run. Now, this is what I also love. This is what I love about being part of a community. This is what I love being a part of Stocktwits, is there is so much information nowadays, guys. So much information out there in the world that I want you guys to always be asking yourself, okay, hey, if there is a reason on why a stock is going on some sort of spike, you can usually figure it on out. If that's by looking over on Stocktwits or Foxrunner or Yahoo Finance, right? Sometimes, again, the easiest thing to do is there a reason on VKTX at this time? VKTX, let's go on down here to 4 days. Now, again, there is no credible news right here. So a lot of times when I see a stock that's going on a very big spike and I don't see any sort of credibility, I do get a little bit more hesitant. Sometimes people just buy stocks that are just moving on up. That's not usually the best thing to do. Don't buy a stock just because it's moving on up. So a lot of times when I see a stock moving on up, I like to look for, okay, where is it going to start falling? Where can I look for a short? For anyone who does not know, every single morning or every single day on the daily chart, only on the daily chart, I use the 200 SMA, the 50 SMA, and the 13 SMA. Those are the only 3 indicators that I personally use on my daily chart. And the reason why I use these is because they are going to be the strongest. Now, what do I mean by the strongest? Guys, so many people use all these different indicators. They use this random cloud. They use, again, this random indicator. They use this, like things I've never even heard of. Do you know what's going to be the most forceful, the most influential, the most psychological, the ones that are going to have the most actual, production behind them is going to be the ones that everyone else uses. Bring up anything right now. Guys, go over to finviz.com, right? Go over to finviz and just, click a random chart. What comes on up? The 200 and the 50. You can go over to TradingView, 200 and the 50. Go over to Stocktwits, the 200 and the 50. Do you know why I use the 200 and the 50? Is because that's what everyone else uses. And since everyone else uses them, everyone's going to realize these are great dip buy opportunities. So the red line is the 200-day moving average. The blue line is the 50 SMA moving average. The green line is the 13 EMA moving average. So a very simple way to break down a chart, let's just do this together right here as we're waiting for that last little 8:30 press release wave, is let's go over to indicators, okay? And let's turn off some of these just for the moment, okay? Let's turn off at this time the 50-day moving average and the 200-day moving average. This is what we have. First things first, the first indicator I want you guys to learn and study is going to be all about the SMA. Now the 13 EMA, the exponential moving average. The 13 EMA, some people use the 20 EMA, very similar, is what I like to call the flexible trend line. The flexible trend line. And what this is going to be showing and how trend lines work for anyone who does not know is it just comes on down to very easy simplicity. Anything that is above, let's say anything that is above that line is going to be considered bullish, which means the stock could be able to move on up. Anything that is underneath this line is going to be bearish, where the stock could easily move on down. That's how trend lines work. Anything above it is bullish, anything underneath it is bearish. The 13 EMA is the flexible trend line. You do not ever, or in most cases, want to buy when you are underneath the 13 EMA because you are very bearish. But once you cross over to the bullish side, look at this, guys. Notice how if you wanted to trade VKTX, and this is just a random penny stock here, but notice when you cross over to the bullish side above the 13 EMA, you don't have to have fear. You don't have to sit here and say, what's going to happen next? Technically, as long as it holds above the 13 EMA, you're still good to hold. Now, again, let's go over to currently. Currently, you've just been holding underneath the 13 EMA. Now, that doesn't just work for smaller caps. Again, you could do this on normal plays as well, such as like Apple, right? Apple. Sometimes it just gives you a great outlook. Hey, whenever you're above the 13 EMA, you could be able to hold it on the bullish side. When you go underneath it, maybe you want to get out as you head to the bearish side. You can see we've been very bearish on Apple, but now we're getting back above the 13 EMA. It's a very simple way to just be able to trade and understanding, okay, are we kind of considered bullish or bearish at this time? Now, again, what are some other great indicators that we use? When it comes on down to, it's also going to be the SMAs, right, as we know, which is going to be the 50-day moving average. And we go ahead and put that one on, right? Now, 50-day moving average. All I technically use the 50-day moving average for is another line of support and resistance, right? The S&P 500, right? What do we tend to see? We tend to see very nice dip buys and bounce plays right around the 50-day moving average. It's not perfect. Don't get me wrong. It's not perfect. But I will let you guys know that we tend to see very nice dip buys and bounce plays right along that 50-day moving average. Notice again, at Amazon, just type in random plays right here. Bounce play, bounce play, bounce play, bounce play, just because that is the most influential. Do you guys understand this? So what I want you guys to be able to say to yourself at this moment, if anyone has ever tried to sell you a super secret indicator, guys, this is a super secret indicator. No one else uses it. I'm the only person who uses it. Guys, run in the opposite direction. That is the worst indicator that you could ever have. That is the worst indicator that you would ever need. That's the worst indicator that you would ever want. No one else is using it. There's no influence behind it. There's no one that's going to be persuaded to sell or buy. What you need to understand about the stock market, traders, is the stock market, stocks move because of you. Stock moves because each and every single one of you. It's me, it's communities, it's Wall Street. People buy stocks, they go on up. People sell stocks, they move on down. If every single person says to themselves, hey, we're coming down to the 50-day moving average, getting ready for a buy, I'm going to buy, Sherry's going to buy, Debbie's going to buy, April's going to buy, Georgie's going to buy, the stock moves back on up. That's the way it works. Stock trading is not just, okay, we see random colors and it's up and down. It's all about understanding where people are going to be persuaded to buy and sell. Now, if we can understand what I like to call the mob is the majority of buyers. If I can understand where the mob is going to be going, that is where I am going to be able to make money. right? So just like when we looked at before, we looked at, I believe it was right here, we looked at all of our entries and exits coming up over on the S&P 500. This is just from where the mob is also going to be looking. If you're a decent trader, if you understand how to look, you are going to be able to understand all your entries and exits over on the S&P 500 today. We know 571 has been the top. Let me again put this back. I'll move myself back on over here. We know that 571 is the top. We know 485 is the bottom. We know right now we're sitting right around 540. We have top resistance at 549. We have, again, uptrend right around 530 at this time. It's been moving on up. So again, we know there's going to be influence to sell right around 550. We know there's going to be influence to buy when we come up towards this uptrend. And now we could be able to develop a game plan. Now we could be able to make the most amount of money. Now we could be able to make the most amount of profit. So it's the same exact thing, traders, when it comes on down to our last indicator right here, which is going to be the 200-day moving average, right? We can go over to add. Let's go over to the SMA right here. Let's add this over 200-day. Let's just change this. I like to always put this over in red. Let's go bada boom, bada bing. Let's go add, and let's get rid of the 50-day moving average. And guess what? This is just another moving average for us. A great way to be able to know, hey, look at this. Let me move myself back over. Look at this. Bada boom, dip buy perfectly, right? Look at this. Bada boom, strong resistance perfectly. Notice this. Bada boom, strong resistance. Moving averages are nothing more than another area to be able to look to buy and sell. Another area of where to reverse. And guys, guess what? Buying stocks doesn't make you rich, right? Selling stocks doesn't make you rich. You need to understand the secret is reversals. If you can know that a stock's going to fall at point A and you can make money to point B, that's where you guys can profit. That's where you guys are going to be able to make money. That's where you guys are going to be able to come out on top. So I want you guys to be aware of that. Now, coming on up here, traders, let me get all our scanners back to normal at this point. We are going to be all set, ready to rock and roll. So let me actually just put my SMA or SMA back on up to 50. Add, boom, EMA, put that back to 13. Put that in that nice little lime green color, bada boom. And now we're all set, ready to rock and roll. So traders, we are getting ready to go. We are coming on down to the end of our Stocktwits show. But before we come on down to our show, I want to watch the 8:30 press release wave together. So let's head on over towards, again, our all-new section over here. And let's get ready to see what comes out at 8:30. And let's see if we can be able to make some money. Let's see if we can be able to make some money. Let's see if we can make some cash together and get after it. Now, I know this is my first show as well over on Stocktwits. I hope you guys have enjoyed the information. I hope you guys enjoyed, again, what we're doing at this time. For anyone who does not know, I do live stream every single day over on tradecaster.com. So if you guys are interested, come on over to one of the largest trading communities in the world over on tradecaster.com. And I live stream here every day with our trading community. Our chat room is rocking and rolling at this time. And actually at this moment, we are having a Black Friday sale, which is absolutely incredible. Everything's 50% off. But I'll be going live on YouTube after this show as well. So again, after the show, I will be live over on YouTube. Follow me on my social medias, and I appreciate Stocktwits, again, give me the opportunity to go ahead and be live for you guys this morning. But hey, let's get ready to rock and roll. Let's get ready to go, and let's see if we can be able to get one final trade here together as a Stocktwits community and be able to make some money before the market even opens on up. So we know we are going to see brand new hot news in the next minute here. Next minute here, let's see what we have. Next minute. Now, what else do you guys want to know? Switch on over to ARCA LS. Make sure you guys are on limit orders. Make sure, again, you guys have kind of typed out how many shares you might be interested in. And we got to see what is going to be the hottest press release of the day. What stock could go on a nice spike, rip, and run. So far, my position box is 0 out of 0. I'm not in on anything. But hey, if you guys enjoyed this morning's show as well, make sure you guys smash that thumbs on up. Drop a comment right now. Let Stocktwits know you want to see some more Sean Dekmar shows in the morning. And let's see, of course, what we have coming on up in the next 45 seconds. I, again, wanted to kind of kick things on off with a lot of education, with a lot of information, helping you guys get prepared on this day. And again, I'm going to be going live for the rest of the morning over on YouTube as well if you guys want to be able to join. But let's see if we can do this together, watching for hot news. Now remember, 7 o'clock, 7:30, 8 o'clock, 8:30, we do see hot news. So that's going to be in the next 15 seconds coming on down here. All eyes on the news scanner, which is going to be right down here at the bottom. And let's see, 10 seconds out here, traders. Man, this is where my heart starts beating. That's where I start getting a little exciting. Here's my position box as well, just in case I do pull the trigger. I want you guys to be able to see it. I do all my trading live in front of you, just so, again, you guys can see everything that I'm doing. So it's 8:30 right now, and as it's 8:30, we're going to start seeing some news come on out. If we see anything that has 3-star, 4-star words, we want to pull the trigger, especially highlighted keywords. So, guys, we have 75th anniversary of an earnings result, positive cash flow. Okay, we'll keep it on watch. MNTS announces a 5-year master agreement with $15 million with momentum. So I would say right now, all eyes, keep your eyes peeled on MNTS. Don't want to, again, just jump in right off the rip. We want to see if it gets some buying volume. But MNTS, 3-star press release, an agreement for $15 million, $6.4 million in float. Notice how some buying volume starting to move on in. Notice how some action starting to move on in. Can you guys start understanding how people are buying in and making money so quickly every day now? Now, please note here, traders, I want you guys to see this. I want you guys to understand how, again, people are jumping in on pre-market and ending their day before the market even opens. This is not the best press release in the world by any sort of means. It's not the biggest or best press release in the world. It's decent. And you can see just like that, stocks go on really quick 20% moves. And this is how a lot of times stocks do turn into those big #1 top gainers. This is how stocks turn into those XAGs. Boom, because of hot news, right? We saw the XAG news right at 8 o'clock, 8:03. All right, XAG was right here. Then, of course, we just don't have a lot right now. Same exact thing with BUL. This came out, though, with Friday. But right now, the best press release, what we have at this time, is MNTS. MNTS trying to get a little bit of a spike at this moment. You can see a little bit of climb. Not going to pull the trigger right here at this moment. I don't want to put you guys in on any sort of bad position, but that's the strategy every single day. That's the way that you guys want to be doing it. That's the way that you guys want to get after it. Okay? Hey, traders, ladies and gentlemen, I just want to say again one more time, thank you again to Stocktwits. Thank you to everyone who has joined us. Thank you for everyone who's watching. Thank you for everyone who's tuned on in. And I hope you guys are getting yourself excited for an absolutely amazing day ahead. MNTS still hitting a brand new home. You guys enjoy it. Thank you so much, and I'll see you guys later.